Today's short video talk about the important high points of whole life insurance, how these policies are created, how they work, and some tips. Let's start with comparing whole life insurance to other types of life insurance, index products or term life. The big difference is a whole life insurance policy is a locked-in premium, locked-in cost kind of a policy, and a locked-in death benefit. And it accrues cash value in the policy over a period of time. So sort of these three factors characterize your basic whole life policy. In contrast, indexed universal life or a variable universal life policy is going to have the flexibility of the premiums. They can also go up, costs can go up, and that can all be impacted. The death benefit can be impacted. With term policies, that's basically just securing a death benefit for a certain period of time. So it's the cheap option. However, the cost of term will inevitably rise. If it's a 10-year or 20-year term, it's at the end of the term. If it's an annual renewable, then you've got rising costs every year. What are some of the other things about whole life insurance that you need to know? One is policy design. So a level premium policy is going to have even payments. The intent of that kind of a basic design is that the cash value in the policy is going to equal the death benefit at age 121, and the policy will be paid up. In contrast, a limited pay whole life insurance policy will have the policy paid up in a specific period of time. You might have that be 7 years, you might have it be 10 years. Those are also called 7 pay and 10 pay. The idea is that that policy will be paid up in that time period. You also have single premium life insurance, which is really moving a pile of cash into the policy and receiving a death benefit in return. Generally, those are going to trigger the modified endowment contract rules. If you want more information about universal life, variable universal, or modified endowment contracts, those are all previous videos. There's also high cash value life insurance, which is a uniquely designed policy to expedite the cash value growth using what we call paid up additions. There's a previous video on strategic self-banking that you can refer to. Depending on your policy design, you're going to go in whatever direction when it comes to selecting the company of choice, and you really want to work with an expert. Advantages of whole life insurance are really the stability and the fixed nature of the cost and death benefit. Also, there are tax advantages if you're working with a participating mutual life insurance company, and it's a participating policy. It means that you receive dividends in the policy. Those dividends are tax-free. They're looked at as a return of premiums by the IRS. Also, you receive tax deferral on the account growth, meaning that the taxes, any taxes that are incurred due to gains in the cash value are deferred. But for whole life insurance, you can take policy loans, you can seek to leverage those assets, create a financial arbitrage, and we've talked about that in many articles and other videos as well. If you have any questions about whole life insurance or any aspect of it, or you're looking to connect with a strategic expert to help you pursue the plan that meets your goals, connect with us. In the meantime, we'd love it if you would like us and subscribe, and also click the bell for notifications, and we will see you in the next video.